Borrowing is handy for managing your cash in the short term, but making the wrong choice could be costly. So in this show we look at recent changes to the loans market to help you work out which option's best. The loans market is currently battling it out in a price war. The average APR on a £10,000 personal loan is now 7.57% compared to 8.4% a year ago, and it's even possible to get one with an APR of just 6.9%. Unlike larger loans, rates on smaller ones haven't dropped as sharply. One way round this is to borrow a large amount of money so you still get the better rate. But the money's going to be paid in your account, so only do this if you're sure you won't touch the extra. But bear in mind early redemption charges tied to some loans, which stop you paying them off too quickly. There are two types of loans, secured and unsecured. The first secures your debt against an asset, like your car or home, making the rates cheaper. This is only advisable if you're in a stable position. Unsecured loans do not link your debt and assets, so you pay a higher rate in return. If you're borrowing a small amount, consider a credit card. For big purchases, find a 0% balance transfer card. The 0% periods on these are increasing, with some offering up to 20 months. But note when it ends and try to pay back the balance before then, or switch it onto another card. If you don't, you could be hit with high interest costs. Also consider your overdraft. Contact your bank to find out what you'd be liable to pay for using it. It may be worth changing the terms or even switching accounts. It's possible you won't qualify for attractive headline rates. An alternative could be a social lending website. These allow you to borrow direct from other people online, and they often offer competitive interest rates. Whichever type of borrowing you go for, ask yourself a couple of key questions. Could you get by without a loan, and can you afford the monthly payments? For more on the latest rates, go to our cards and loans section on the website.